please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, we are seeing resistance at higher levels, 10,150 odd mark. From there, we've seen a bit of a downtick in the last few minutes. UPL and SBI, both those two stocks have seen a bit of a downtick. In fact, SBI was holding in the green when we started off the show, so I think that stock should come up for you. Even Adani Ports is another one that slipped in the last few minutes. So keep an eye out on those stocks, but our ticker team is keeping it alive. The footwear stocks are doing well. Bata did see a bit of a volume spike around an hour or so ago. We have Mirza International as well as Liberty Shoes. For some reason, both those two stocks as well are moving higher, and volumes as well are picking up, particularly on Mirza International. So keep an eye out. Remember, these stocks have corrected a whole lot from the recent peak, but some bit of a bounce is what we're seeing on both those two stocks. But how do you trade the Nifty from here on? To understand that, we have Ashwani Gujral as well as Sandeep Wagle. Ashwani, coming across to you first. The Nifty, well, we have off the session's lows, but not too much from there. What's the trade on the Nifty from here?
So my sense is that since the morning you have no follow-through, so it appears that at lower levels there is some consolidation, maybe even some short covering. So definitely you want to try and buy here with a low of the day type of stop, and maybe we could close a little bit better. You know, it's basically a 30-40 point range type of market. So maybe 10,160 thereabouts, we can end up the expiry around those levels. But overall, it does not seem like the global cues are really able to take the market lower. Having said that, you know, several stocks are doing well in consumption. Titan is a buy with a stop of 950, target of 985. Bata is a buy with a stop of 745, target of 770. And BPCL is a buy with a stop of 420, target of 445. And before I complete, autos is doing very well. So Hero Moto, Motherson, Maruti. So there seems to be, you know, some sort of tailwind in the auto space.
Yes, indeed. Motherson Sumi is moving higher as we speak. So from the lows, Motherson Sumi has seen a recovery. There you go, at the high point of the day for Motherson Sumi. And from the lows, it's seen a recovery of close to about 2.5%. And India Cements is another stock which is moving quite well. Ashwani, any thoughts on India Cements?
See, India Cement and cement overall is not showing great amounts of traction, but it's been beaten up quite a bit. So around 150, it generally tends to find support. It's basically, you know, range bound type of stock. So 150 to about 220, lower end of the range. So that way the risk is lower, but overall not showing great traction.
Okay, all right, not showing great traction there, but let's get Sandeep Wagle as well into this discussion. Sandeep, what stocks do you have for us today?
Afternoon, Nigel. I would go with a buy in a Maruti, stop loss of 89.50, target 9090, and a sell in a National Aluminium, stop loss 69, target 63.
Okay. All right, gentlemen, thank you very much for joining in. So 10,142, Ashwani says that perhaps we could inch a little bit higher, closer to 1,160 towards as we come close to the end of expiry, though it will still be below the 200-day moving average of 10177. Awaiting the European market opening yesterday, they had a good session. They closed up with gains of close to about 1.5%. But after Europe closed, we saw a sell-off in the US markets dragged by technology. So today there could be some nervousness in Europe, and that is reflecting in early trades. So the CAC, the FTSE, both of them have opened with cuts of nearly about 1%. So just reflecting the late sell-off which took place in the US markets. It's time now to talk about individual stocks, the stocks that are moving and shaking this Wednesday afternoon. And on the downside, you've got Persistent Systems, which has lost close to about 10% in trade. Now it's wiped out all its 2018 gains on account of the news on your screen. The company has indicated that their IP, that's the intellectual property revenues, which is about 26% of the overall business, will see a revenue decline of $8 million on a quarter-on-quarter basis. Now, $8 million is significant because the company's quarterly run rate is $122 million, at least as of the last quarter. So that's about 6.5% of their Q3 revenues. And IP is a non-linear business, which means the cut in revenues directly flows into the margins as well as on the earnings front. Now, Q4 is typically weak for IP, so it's a seasonally weak quarter. But this quarter, the seasonality and the negativity seems to be far more than what we usually see. But the management says that it seems to be a Q4 problem because the outlook for FY19 remains quite robust, and they're on track to exceed the NASSCOM guidance of 7 to 9% for the full year. Morgan Stanley says this development has come as a negative surprise to them and perhaps for the company as well, which is why they had to give this business update. They're targeting a revenue decline of 5% on a quarter-on-quarter basis, with their FY18 EPS falling by 6%, but they cannot rule out a potential PE derating as well. So down and out today for Persistent.
Okay, all right, Rima, thanks so much for that. But let's hop across to Mangalam. I believe he's working out today. Mangalam, what's going on with Talwarkar's? Yesterday, people thought that, in fact, it was the gym business. It actually wasn't that, eh?
Absolutely, Nigel. Let's not mince our words out here. Perhaps it's shameful what's happening to retail investors. Working out, well, it seems as if the promoters want the investors to work out outside of the gym in their minds as well, exercise their muscles to see what's exactly happening. The stock is stuck at lower circuit. Remember, yesterday on this very show, I had said that the stock has gone X the lifestyle business, but actually that wasn't the case. It actually went X the gym business. Why were investors confused? Well, because the non-gym business, which was trading yesterday, was named Talwalkar Better Value Fitness, which is the same as their current gym business. The company, instead of clarifying during the markets, post-markets, we got a clarification which told you the flowchart of the scheme of arrangement. So yesterday what listed was the non-gym business under the name Talwalkar's Better Value Fitness. Going forward, there will be the gym business which will be listing under the name Talwalkar's Lifestyle Fitness. And if that's not confusing enough, once both the companies are listed, they will work for a name swap, will apply for a name swap. So the gym business will be called Talwalkar Better Value Fitness, which is currently the lifestyle business. And why does that make a lot of difference? Well, because it's the gym business which has 80% of the revenue, the non-gym business has 20% of the revenue. Brokerages assign a value of 60 rupees to the non-gym business, and that is the adjustment that we're seeing today and in the few days to come.
So you're saying Talwarkar's stock price, currently the listed entity, should perhaps come down to 60 rupees now from 180. That's the extent of fall?
Exactly. That's what the brokerages are assigning, 50 to 60 rupees a piece. That's the kind of adjustment that we saw yesterday as well, when the street thought it was actually the non-gym business which went out of the business.
Okay. But the fall today is, of course, contained on account of this fact that the stock is in T to T, as a result of which the lower circuit stays at 5%. Thanks, Mangalam, for putting that in perspective. Sonia, over to you on Jet Airways. The employees are not going to be very happy. They're not going to get their March salary, at least ahead of the long weekend.
Well, you know, Rima, that's what reports are suggesting. Now, it's not for all employees. Reports indicate that a certain section of employees, including pilots and engineers, will see their salaries getting deferred to the 10th of April. That is because of some circumstances which could not be avoided, according to the management. But that's not the real reason why the stock is under pressure. You know, the stock has lost 25% of its value this year. There are reports indicating that the company could be bidding for Air India, although at this point in time, the management is undecided. But if they really bid for Air India, it's going to stretch their balance sheet further. Now, we all know that Jet Airways has been sitting with a negative net worth for many years. In fact, the gross and the net debt for the company is also quite high. It stays at about 8,430 crores on a gross basis. And of this, aircraft debt is almost about 2,200 odd crores. So the question everyone's asking is, if they bid for Air India, how are they going to fund this buyout? Remember, it's not gone down well in the past when they bought a rival airline. In 2007, they bought Air Sahara, which really drained their balance sheet quite a bit. They got into a huge legal tussle with the Sahara Group. So this time around, if they do go ahead with that bid, then it's going to stress their balance sheet a lot. And I guess that's what's spooking the stock a bit today.
Okay, all right, Sonia, thanks so much for making sense of that. That explains why, in fact, the stock has lost more than 25% from the recent peak. But Mangalam still standing by. Mangalam, what's going on with Delta Corp? That's down close to around 8 to around 9%. Higher taxes, I believe, in Goa.
Absolutely, higher taxes in Goa, Nigel. You know, perhaps the government is looking to make good the shortfall due to the mining lease by increasing the taxes on or licenses for Goa casinos. They've increased it by the tune of 4.5 to 5 times. And these are reports. We haven't independently verified them. But remember, this may increase the state's annual revenue by close to around 150 crores, comes into effect from the 1st of April. So the fees for offshore vehicles, casino vehicles for 400 people have been hiked by 3.5 4.5 times, from 12 crore to 40 crores. For other casino vessels, they've been increased anywhere between 2.5 to 4.5 times. What does that mean for Delta Corp? Well, if you take a look at their capacities, Deltin Royale and Deltin Jack, both of them are excess of 400, so there the fees have been hiked by 3.5 times. And then you have the Caravella and Suites Casino as well, which are onshore, rather they're on the land. So that has been hiked by about 2.5, 3 times too. License fees that they paid last year was close to 33 crores, and the EBITDA that they made was close to 160 crores. If this is increased by 3 times, the license that they will be paying would be closer to around 80, 85 crores, would hurt their EBITDA.
Okay, thank you very much for that. A quick recap then of the top buzzing stocks that we're tracking at this hour. We've got Jet Airways, Talwarkar, Persistent Systems, as well as Delta Corp. For the markets, inching up bit by bit, so now above the 10,150 mark. And the support is provided by private sector banks like HDFC Bank. Let's get that up for you on your screen. Kotak Mahindra Bank is also in the green again of close to about 0.5%, as well as the auto names led by Hero Motor as well as Maruti Suzuki.
Well, Fortis is a stock you should just keep on your radar. It was down close to 10%. Now it's down roughly around 13%. So just keep an eye out on that one. Remember, the street is not too happy about the deal. And not just that, today is the last day that it's trading in the derivatives market. So all the contracts will get wound up today. So keep an eye out on that one. It's some big selling in the last few minutes, actually. A lot of delivery was taken in anticipation of this deal. And clearly the street is not happy. It appears there is a lot of delivery-based selling as we speak. But as promised, JMC Projects, that's the stock on our radar. Remember, the company bagged orders worth 630 crore rupees. To understand what's going on there, what's the order guidance as well going ahead, we have Mr. Manoj Tulsian, whole-time director and CFO of the company, who joins us. Hi, Mr. Tulsian. Thanks so much, sir, for joining us today. Well, 630 crores is this order, what you've just disclosed. If you could give us a sense, what was the total order inflow for this year? And also in the coming year, that's FY19, what kind of an order inflow are you looking at?
Hi, Najil. Good afternoon.
Afternoon.
This year, we have slightly bettered our guidance. We had a guidance of around 3,200 crore of new order book. And we got orders of close to around 3,300 crores. This is in line with our growth strategy.
Okay.
This year, we are in the growth of around anything between 16 to 20%.
Okay.
And keeping the same momentum next year also with the visibility of the order book, we are looking at a growth of anywhere between 12 to 15% for sure. Oh. And for next year, we are again looking for building up an order book of around 4,200 to 4,500 crores.
So order inflows of 4,200 to 4,500 crore is what you're guiding for in FY19?
That's right.
Okay, with the 12 to 15% minimum revenue growth. If you could tell us, these recent order wins, are they coming with improved margins, or has the bidding intensity intensified on account of which margins are getting crunched?
So, Rima, most of this order book, which we have declared, around 600 odd crores, they are all from building segments, and they are repeat orders from our existing clients. So they are almost at the similar level of margin, and we have been very categorical in our earlier discussion also that we have become very much bottom line driven organization. So our intention is to make sure that the margin levels wherever we have reached, we must protect it, if not improve further.
Okay, all right. Mr. Tulsian, please hold on to that thought. We have some news coming in on Alchem Laboratories. They're saying that the US FDA has inspected the Amalya unit from March 19th to 27th, and there are some observations. 13 observations is what we have got for that unit. That's in Daman, and that explains why, in fact, the stock has moved to the low point of the day. So it's down close to 3 to 4%. We'll have to get clarity what exactly are those observations as well. But for the time being, the street has just taken that negatively, and that's why the stock has moved to the low point of the day. Remember, we'll have to understand what are those 13 observations, and then, in fact, you will get a better idea of that. But for the time being, there is some profit booking. But getting back to our conversation we were having with Mr. Tulsian of JMC Projects. Well, sir, sorry for that. But if you could give us a sense, what is your total order book as of now? You were telling us the last time around that you're looking at expanding your water infra business as well. So how much does that constitute of the order book, and how's that progressing?
Nigel, this year we should be closing the order book close to around 7,700 odd crores.
Okay.
and our water book would be close to around 15% of the same.
Okay. All right.
That's a good sizable number, and we continue to build upon the same. Our experience on the sector has been good.
Yeah.
And we hope that we continue to build up the order book on that segment going forward also.
Does the company have debt on its books, and if yes, how much? And would you be looking at any form of equity raising in order to enable execution of these recent order wins?
So our control on cash flow has been very good in the last 3-4 years. And of course, we have debt. EPC business without debt is a dream.
What is the debt?
So we have a debt of close to around 750 odd crores on the standalone balance sheet.
And consolidated?
Consolidated would be close to around 1,800 odd crores.
1,800 odd crores. Any plans of reducing the debt, or you're comfortable at those levels?
No, I think the margin profile has improved, Nigel, and with the growth which we are seeing now,
okay,
I think we will have enough cash flow to take care of the working capital side.
Okay.
Right. The reduction in debt is mainly possible once we look at some exit on the road BOT.
And you're not
side.
looking at selling those BOT projects? I remember at one point of time you were looking at, then you said you're not desperate to sell it. So what's the plan now in terms of those BOT assets?
I think that strategy is also working well. If you really see this year, the traffic growth on all the 4 projects has been very good.
Okay.
And I think if that continues for another 2 to 3 quarters, the valuations of the project would be very
So you're
rightful.
keeping those projects basically?
Yes, but at the right time, of course, our the macro strategy continues to exit.
Okay.
Okay, Mr. Tulsian, we'll leave it at that. Thank you very much for joining in. That's GMC Projects. But Alchem Laboratories continues to sink to the low point of the day. This is after the US FDA, after the company receives a Form 483 with 13 observations for their Daman facility, which was inspected towards the mid of March. So Form 483 received by the company with 13 observations. As of now, we don't know the nature of the observations. So we'll quickly go across to Ekta Batra to try and get a sense if she knows what the nature could be.
Well, 13 observations have been received for one of their major plants when it comes to the US business, which is the Daman facility. Now that's around 35 to 40% of the total US operations that they have. But remember that Alchem as a whole has around 20% of total sales going in to the US. Now the stock is actually at the low point of the day, one because of the large number of observations that we're seeing, but interestingly in September of 2016 they had received 13 observations for the Daman facility itself, after which they had received an EIR within 3 months of that. Okay. And we had seen a similar reaction take place then. Obviously we don't know the nature of the observations. There was a lot of hearsay about when the inspection had taken place, that it could have been a tough inspection. Let's see, wait for the 483.
Okay, it looks like a tough one for the stock market at least. Stock down 9%. But on that note, we'll wrap up on halftime report. You stay with us. Business Lunch comes up next.